Will the euro crisis push up value of London prime property as a safe haven?
The short answer is yes, I believe so. London's become recognised as a global market for real estate. It's probably the deepest and most liquid market in the world. And I think there's a flight to quality and risk of aversion generally in the real estate markets. A lot more international investment into the UK, particularly into London. And what we're seeing there is people investing for different reasons. Repatriation of wealth. They're looking for currency hedging, and they're looking for risk aversion in terms of property yields.
Can you explain prime and why the investor grade area is becoming smaller?
Yeah, traditionally prime has all been about property and real estate fundamentals, and we think about location. It's more than that now. In these risk-averse times, people are looking at the quality of the leases involved. They're looking for bond-like qualities amongst the leases, long let to very strong covenant tenants, and buildings that can have less exposure to depreciation. They're future-proofed, and they respond to all of those aspects.
What does this scarcity mean for returns?
It means lower returns generally. I think we have to get used to a low return environment. Immediately after the credit crisis, we saw some quite impressive returns from real estate. But I don't think we can rely on yield to move inwards anymore in the prime sector, certainly not significantly. And rental growth is very much held back by the wider economic concerns.
What will High Street UK and Retail Park Europe look like in 2012?
High Street UK is becoming more and more diversified, and I think we're finding at the top end very much that's a very strong part of the market. But generally, retailers are struggling. We're also seeing structural differences in the way in which people purchase. This Christmas, for example, probably 10 to 20% of purchases were made over the internet. So this means retailers generally want less space in fewer locations. So for me, that feels like that the dominant centres have become stronger. There are some in the middle, which we call sort of striving centres, that are moving towards the very dominant end. And then there's the rest. And I think the outlook for the rest is very challenging.
Should UK investors look to Asia for better property returns?
I would say if we're categorising at Henderson, we'd probably say that US and Europe is more of an income play, and Asia is more of a total return play. But that's for a reason. And with those higher expectations of return comes higher risk. It's emerging for a reason. There are structural risks, there are political risks, and there's far less transparency in the region. So I think, yes, you can expect high returns, but you want higher returns.
If you had to pick just one geography for 2012 in the property asset class for above average returns, what would that be and why?
That's a difficult question. I think I would probably answer that in a way of looking at the risk-reward equation. And for me, the US probably stands out at the moment. Perhaps in the multi-family or rented housing sector, which is quite counter-cyclical at the moment. And there's some very good incentives on the debt side for investing in that sector.